Now here is Komal Mittal and Kusum Ramachandran from the offices of Manjit Singh CPA PC with some tax tips.
Good morning, viewers. This is Komal Mittal from the accounting firm of Manjit Singh CPA PC in Falls Church, Virginia, and with me is Kusum Ramachandran. Hi, Kusum.
Hi.
Kusum, these days we come across a lot of high net worth individuals who may have gift tax
Filing
requirements. So would you share with us the information on who needs to file a gift tax return?
If you have, yes, you're very right. These days we do see a lot of individuals who make gifts to their relatives, family members, and many of them do not realize that there is a requirement to filing a gift tax return, and Form 709 is the form number that needs to be filed, and each year, every taxpayer, especially the high net worth taxpayers, should take a look at their transactions and see if they may have given away so much that would require them to file a gift tax return. There are two exceptions. If you pay directly to educational institutions to cover the fees of your dependents, that would not require you to file a gift tax return. If you give away to charity as opposed to individuals, that you do not have to file a gift tax return.
Now, is there an annual exclusion limit for this gift tax?
That was the next thing that I was going to talk about, was that if you give less than $13,000 to an individual, then you don't have to file a gift tax return. But if you give more than that, and in this, the government has given a little bit of a break in that there is what is called gift splitting, so that if a husband and wife give $26,000 to each of their children, it's $13,000 per person, then they wouldn't. The moment they give $26,001, then there would be a filing requirement. That's your exclusion amount. People are pretty good at remembering the dollar figure in terms of giving cash. They don't realize that if they make gifts of appreciated property, if they deed a house away to a dependent, if they have condos that have been rental properties and their child graduates and they want to let the child have a condo, then there is a gift tax filing requirement, because that condominium surely costs more than $13,000, and that would trigger the requirement to file a gift tax return.
Will many people end up paying gift tax?
There is an unified credit. The gift tax rate now is 35%, and that's lower than what it used to be. And there is a unified credit. In other words, you don't have to pay. It used to be about a little over $345,000, so that if you gave $25,000 and you calculated the 35% on that, and then that would be what you would pay in gift taxes, except that you have a large unified credit. So what you would do is offset the credit, and then the amount that would be available the following year would be reduced, but you still wouldn't actually pay taxes unless you wanted to for some reason. I have not come across anyone that wants to pay it till the unified credit is used up. And that credit amount has also gone up now so high that you really would have to give away more than $5 million before you would have a liability stemming from it. So that when you plan your estate, you need to take this into consideration, because the final math on all of it will be done. The estates now also, their exemption amount is $5 million. So this is a tax planning tool that when you go to your financial planner, or when you have your trusts drawn up, you would take that, elder law attorneys always take these matters into consideration. But the important point today that I wanted to make is always remember when you make gifts of property that would trigger a filing requirement. Not filing it, these days the enforcement is greater and greater. You don't want to be, the gift tax returns are due at the same time as your personal tax filing deadline. You can, of course, apply for an extension and file it, but file you must. And I hope that this information has been useful to our viewers, that they will look at their transactions each year and consult with a professional, especially when before they make a gift, so that they know for sure what the tax implications of doing so are.
Thank you so much for being with us, Kusum. Thank you.